Good morning, I'm Nathan Hager.
And I'm Karen Moscow. Here are the stories we're following today.
First, a hard-fought bipartisan deal to impose new border restrictions in the U.S. and unlock Ukraine war aid is on the brink of collapse in the Senate. Bloomberg's Amy Morris has the latest from Washington.
Republican senators left a contentious 90-minute meeting last night, arguing that a planned Wednesday vote on the measure is too soon, delaying aid for Israel and Ukraine and leaving the border situation unresolved. Republican support for the bill crumbled in the face of opposition from Donald Trump, prompting a reaction from Senate Majority Leader Chuck Schumer.
Everyone's asking the same question. Are MAGA Republicans serious about fixing the border, or is this merely political?
The $118 billion deal was the result of months of closed-door Senate negotiations. The key Republican in those talks, James Lankford, says he expects Wednesday's planned procedural vote to fail. GOP discussions continue through today. In Washington, Amy Morris, Bloomberg Radio.
All right, Amy, thanks. Now to the latest from the Middle East. Secretary of State Antony Blinken is back in the region for his fifth trip since the October 7th Hamas attacks. He met with Saudi Crown Prince Mohammed bin Salman and is in Egypt this morning to rally support around a ceasefire deal with Gaza. Meanwhile, Israel is warning that time is running out for diplomacy with Hezbollah, the Iran-backed group it's been fighting along its northern border with Lebanon. Bloomberg's Elisa Odenheimer has more on that from Jerusalem.
Hezbollah actually has been attacking Israel since October 7th. They said that they're backing up Hamas in its attack against Israel. And in response, Israel has been striking back and has hit Hezbollah pretty hard. But it looks like both sides are trying not to inflame the other side too much. Both sides have had casualties for sure.
Bloomberg's Elisa Odenheimer reports the near-daily attacks between Israel and Hezbollah have forced about 100,000 people to flee their homes on both sides of the border.
Let's turn back to markets, Karen. We saw a huge rally overnight in Asia. Stocks in China gained 3.5%, and Hong Kong's Hang Seng Index surged 4%. The gains came after Beijing took more steps to stem a stock rout, including a pledge by sovereign wealth funds to further increase holdings of ETFs. More from Bloomberg Asia Daybreak anchor Brian Curtis in Hong Kong.
No more so-called national team. This is an official statement. Central Huijin Investment has expanded its buying of ETFs. Central Huijin is the unit that holds Chinese government stakes in big financial institutions. It's under the Sovereign Wealth Fund. In addition, President Xi Jinping is set to receive a briefing from Chinese regulators on the markets. That underscores the urgency of supporting the country's plunging assets. Also, the regulator, the CSRC, said it will support listed companies to increase their stock buybacks. In Hong Kong, Brian Curtis, Bloomberg Radio.
All right, Brian, thanks. In Europe, it's a very busy day for earnings. We go to London and get the latest with Bloomberg Daybreak Europe anchor Stephen Carroll. Stephen.
Good morning, Karen and Nathan. UBS is resuming share buybacks, handing up to $1 billion back to shareholders this year. The Swiss lender also increasing its cost-cutting targets, but that wasn't enough for investors. Shares have fallen in Zurich. Over at BP, buybacks are getting a better reception. The oil giant stepping up the pace and planning to buy back $3.5 billion in the first half of this year. Less optimism for the future from the German chipmaker Infineon, which is forecasting lower revenue this year as it's hit by a slump in demand from industrial customers. In London, Stephen Carroll, Bloomberg Radio.
And Stephen, staying in tech, but here in the U.S., we're watching shares of Palantir. They are up 18.5% in early trading. The company gave a higher than expected profit outlook for this year thanks to artificial intelligence. Bloomberg's Charlie Pellet has the story.
The Denver-based software and analysis company said it expects adjusted income from operations of $834 to $850 million for this year. Analysts had expected $760.3 million, according to estimates compiled by Bloomberg. Palantir CEO Alex Karp said in a letter to shareholders, Palantir also reported 2023 net income of $210 million, its first year of being profitable. The results exceeded analyst estimates of $194.5 million. In New York, Charlie Pellet, Bloomberg Radio.
All right, Charlie, thanks. We have some more news on the artificial intelligence front. NVIDIA and Cisco Systems are teaming up to make it easier for corporations to build their own AI computing infrastructure. For NVIDIA, the partnership opens up another channel for its technology. Cisco, meanwhile, gets to capitalize on the AI spending boom that's helped turn NVIDIA into the world's most valuable chip maker.
Well, Karen, more trouble may lie ahead for Boeing after its spent most of this year grappling with problems involving the 737 MAX jet. Let's get the latest with Bloomberg's John Tucker. John?
And Nathan, Boeing's largest union will demand a 40% pay raise for its workers. The International Association of Machinists and Aerospace Workers says it's willing to go on strike. Well, that would shut down Boeing plants in Washington and Oregon, including assembly lines for the cash cow 737 jets. The current worker contract expires in September. Talks are set to start on March 8th. Pile this on top of a host of problems. Boeing already faces questions from lawmakers and investors over manufacturing. The latest problem, an issue with misdrilled rivet holes. I'm John Tucker, Bloomberg Radio.
Time now for a look at some of the other stories making news around the world. And for that, we're joined by Bloomberg's Amy Morris. Amy, good morning.
Good morning, Karen. The House of Representatives Committee on Rules held a meeting yesterday concerning the possible impeachment of Homeland Security Secretary Alejandro Mayorkas. Republican Committee Chair Tom Cole.
The consequences of this crisis have been stark and sobering, and there's hardly a community anywhere in this country that's not felt the impact.
Democratic Committee Ranking Member Jim McGovern.
Truly, this is one of the most pathetic, embarrassing things that this committee has ever done.
Now, the House plans to vote today on 2 impeachment articles against Mayorkas. The wind-whipped storm that dropped an historic amount of rain on California this week has killed 2 people and has caused as much as $11 billion in damage and economic losses. And it's not over yet. More rain is expected, and there is said to be a risk of landslides and rock slides. More than 24 structures are reported damaged by heavy rain and mudslides. Los Angeles Fire Chief Kristen Crowley.
Please stay away from the LA River and other moving water. Now, due to the heavy rains, the ground has become soft and slippery. You could easily fall into the wash, so please be careful.
Los Angeles Mayor Karen Bass has declared a local state of emergency. Some areas like Montecito are under evacuation orders. The Maui Police Department has released the first probe into the wildfires that broke out on the island in Hawaii back in August. The fires that destroyed the historic Lahaina district of the island were responsible for the deaths of 100 people and the burning of more than 6,600 acres. The report found that emergency dispatch was overwhelmed by call volume, with wind and flames leaving Lahaina without cellular or Wi-Fi capacity. King Charles III is receiving treatment for an unspecified form of cancer. It was discovered during his hospital stay last month for treatment of an enlarged prostate. Buckingham Palace did not disclose the type of cancer that was found, but did say it was not connected to what it called a benign prostate condition. King Charles will continue state business, but has suspended public duties and appearances. And Prince Harry has spoken to the king about that diagnosis and is set to travel to the UK from California to see his dad in the coming days. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg. Karen.
All right, Amy, thank you. We do bring you news throughout the day right here on Bloomberg Radio, but now you can get the latest news on demand, and that means whenever you want it. Subscribe to Bloomberg News Now to get the latest headlines right at the click of a button. Get informed on your schedule. You can listen and subscribe to Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, plus Apple, Spotify, and anywhere else you get your podcasts. Time now for the Bloomberg Sports Update. Here's John Stashower. John.
Karen, they now call it Super Bowl opening night. So in Las Vegas, the Chiefs and 49ers met the media for the first time this week as they prepare for Sunday's game. Just as they did 4 years ago in Miami, and the coaches are the same. Andy Reid for the Chiefs, Kyle Shanahan for the Niners. Shanahan was asked about the difference from last time.
Andy and their staff do as good of a job as anybody with their scheme and their coverage beaters and everything they do. They still have the same quarterback and Patrick, who's as good as it gets. He was then, and it's hard to get much better than he was then, but I bet he is a little bit. And Travis and everybody, so not a big difference.
A little controversy about the field the 49ers are using to practice this week at UNLV. They're a little upset with it, but they will continue to practice there. Kansas City Royals with a big signing. Their young shortstop, Bobby Witt Jr., who's been sensational in his first 2 seasons in the majors after being the number 2 pick of the 2019 draft, locked up an 11-year contract for $289 million. Upset in college hoops, Kansas ranked 4th in-state game, lost in Manhattan to Kansas State 75-70 in overtime. NBA, Lakers making 3 wins in the last 4 days. They won in Charlotte, 124-118 for Anthony Davis, 26 points, 15 rebounds, 11 assists. Cleveland stays hot, 14 of the last 15, a 136-110 rout of Sacramento. Struggling Sixers without Joel Embiid, lost at home to Dallas, 118-102. John Stashower, Bloomberg Sports.
From coast to coast, from New York to San Francisco, Boston to Washington, D.C., nationwide on SiriusXM, the Bloomberg Business app, and Bloomberg.com. This is Bloomberg Daybreak.
Good morning. I'm Nathan Hager on a big day for earnings in Europe, including from UBS. The Swiss banking giant announced it will resume share buybacks this year, vowing to hand as much as $1 billion to shareholders as it seeks to move beyond the integration of Credit Suisse. The CEO of UBS, Sergio Ermotti, was brought back to lead the bank last year after it stepped in to rescue its competitor in a government-backed deal last March. Sergio Ermotti sat down for a conversation with Bloomberg editor-at-large, Francine Lacroix. Let's listen in now.
I'm very pleased that we finished the year with a very strong momentum. We achieved a strong underlying profitability for the second quarter, for the fourth quarter, and also we saw clients confirming their trust in our organizations. 22 billion of net new assets, strong deposit inflows across wealth management and the P&C. We made good progress in winding down part of the non-core exposures. And also that has allowed us to then also reiterate the story that we are a capital. We want to have a dividend that is increasing progressively. So we have an increase of 27% of our dividend. And also in the second half of 2024, we will do a share buyback.
How would you describe 2024? I know your chairman has said in the past that it's a difficult year.
Is a pivotal year because if you think about the journey, the first 6 months are very intense. I think we're going to go through the merger of the two operating entity, UBS and Credit Suisse AG, will merge in the first half of the year. The subsidiaries in the US and Switzerland will merge also during 2024. So this is the prerequisite to be able to realize our synergies. We already achieved 4 billion of cost savings, exit rate 2023. We now plan to have another gross savings of 9 billion between 24 and 2026. Partially, this will be reinvested in the business to make our platform more resilient and up to speed with the requirements, but also to invest in our future.
So, Sergio, how important was this investor update just to give a blueprint of the kind of growth that you want to attain and how?
I think it's very important for investors to understand how we are connecting the dots between what we said in summer last year and in respect of our long-term plans, in 2026 plans and going beyond that. So today we are providing few dots between 2024 and 2026, how we achieve cost savings, how we manage our balance sheet, how we want to manage growth that has to come in a sustainable way. And also, we give also some indications about what to look forward after the completion of the restructuring, which is then going to enable us to harvest, the work, and we did with a quite attractive returns.
So how will you achieve this quality, sustainable growth?
I think that one thing that we need to do is to be willing in the next couple of years to sacrifice a little bit of top line growth in order to improve the returns on our financial resources, particularly on the balance sheet. So I think that what we both was a very strong business in terms of client base, very good people, very good capabilities, but the balance sheet was not properly priced. We need to price risk in a better way, and that will help us to contribute to our financial targets for 2026 and beyond.
So exactly what does that growth look like? Is it a focus on the US or elsewhere?
Everywhere. I think that when you look at our wealth management business, we are planning to add around 100 million a year in terms of assets. This is basically the net numbers. We're going to want to grow more on a gross basis, but we are willing also to let some assets go that are not yielding what we believe is the appropriate level to cover for risk and capital cost. And then beyond that, we believe we're going to grow at around 200 billion. So if you think about what it is, we are recreating the business we just acquired. We acquired 700 billions of assets. In the next 3 to 4 years, we're going to build up organically the size of Credit Suisse again. So it's very important for us to do that, but in a sustainable way.
But for the U.S., for example, could we see an acquisition?
No, I think that the U.S., what we need to do is now to institutionalize our platform by giving more capabilities on deposits, on credit. We need to broaden up more of our global expertise in terms of CIO offering products, the asset management capabilities that are coming in. And what we need to do is also to allow and make it easier for our non-U.S. clients to book business in the U.S. because a lot of our global clients, they want to be also booked in the U.S. and this is a real opportunity. So we believe that by doing that, we're going to be able to narrow the gap to our competitors and setting the base for the next phase of growth.
This is Bloomberg Daybreak Today, your morning brief on the stories making news from Wall Street to Washington and beyond.
Look for us on your podcast feed at 6 a.m. Eastern each morning on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each morning starting at 5 a.m. Wall Street time on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Nathan Hager.
And I'm Karen Moscow. Join us again tomorrow morning for all the news you need to start your day right here on Bloomberg Daybreak.